All right, we're going to add to the mix. We're going to add another voice, CNBC contributor David Kotak. He's Chief Investment Officer, Cumberland Advisors. Rest of our panel's still here. Luskin, Bowyer, Greenberg, Gage, the whole world. My name's Kudlow. David Kotak, how the heck are you? Fed today, I'm going to assume it's a leak from Don Cohn, the #2 Fed guy, to Greg Ip. God bless Greg Ip. We've been arguing for this on this program, me and Luskin and Bowyer and others. The Fed stops easing, which is a de facto firming up. The dollar goes up, and stocks love it as a sign of better earnings, lower energy, and a better economy, Mr. Kotak. What's your take?
Yeah, I'm with you. The panel is clear. Herb Greenberg is the outlier, Larry. It's clear to me. When you narrow risk premiums, stock markets soar. When you widen risk premiums, stock markets tank. We've had wider risk premiums, whether you use the junk bond spread or some other spread. There's 100 ways to measure risk premiums. They have peaked in the last few weeks. They are beginning to narrow. Stock markets recognize it. The process is finally working.
Joe Livornia says it's going to all come tumbling down because of the LIBOR market. You got a response to that?
Larry, that's not totally fair. There's still significant stress, which I think means that we're not out of the woods yet, and the Fed still is going to have a predisposition to cut rates beyond next week. That's my key point.
You know, Joe, let me just raise a point. I want Dave Kotak to respond, but most of this noise is coming out of the London banks. You know it, and I know it. And that's why I think you're putting too much premium on this point of view. The overwhelming rest of the evidence from the risk spreads is a pulling in of the risk spreads, Joe.
That's partly true, Larry.
You used to talk about 10s to 2s. You look at that, or the 10-year LIBOR spread. You look at that, the 2-year swap spread. You look at that, the iTrack spread. You can look at all these spreads. They're all telling the picture that Mr. Kotak just succinctly described.
They're not really in swap space, but Mr. Kotak should be able to speak now. But
go ahead, David Kotak. You heard Mr. Livornia?
Yeah, I think there's a point here, Larry. LIBOR is probably the most important commercial interest rate in the world. There's 150 trillion with a T, if you count the derivatives that reprice off of LIBOR. And LIBOR is not functioning properly. Joe is right about that. It's not as bad as it was a few weeks ago, but it is not good. That means the Fed's work is not done, but the Fed can do this work with instruments like the TAF or the redesign of its balance sheet. It can take the Fed funds rate down to 2, keep it at 2 1/4. They are about the same. It's the redirection from this blunt instrument to these precise instruments that will break loose LIBOR.
I want to give equal time to the dissenters. Herb Greenberg, how worried are you, serious question, honest question, about credit and the stock market and risks? How worried are you at this juncture, Herb? Do you see any loosening up, or do you think we should all still be on notice, investors out there who follow us, that they should be on notice?
Well, Larry, I think the risk still remains, and suddenly to hear so many people just turning around and saying, hey, the recession's over. And, you know, by the way, the recession hasn't been declared, and by the time it's declared, of course, it may be over. It may be on its way to being over. But we haven't even seen it declared yet, and we know it's coming, and we're watching company after company, Larry, come out and tell us they're still concerned about the consumer and the economy.
No, it's because they've been burned, Herb. It's time to come out of hibernation.
I'm sorry, what planet are you on? What kind of argument is it to say that there's still concern? There's always going to be concern. You're taking, nobody on this, I'm at least not saying that, oh, the recession's over.
Don,
I never agreed there was a recession to begin with. And a lot of people on this show haven't. You're just making these conclusions and then coming up with further conclusions based on your initial conclusions. That's not logic.
A lot of people on this show never thought that there would be a credit crisis, for goodness sakes. And guess what?
So what?
There was. And
what's your point? What's your point? Because Starbucks says they're having a hard time and they're blaming the credit crisis for it? Well, look at Google, look at Intel, look at all the companies who are doing great.
Hey, look, there's nothing we can say on the credit.
How many companies are doing great? I think it's wonderful. Google's doing very well. They're a very good company. It's a company-specific situation. But the whole world hasn't turned on a dime suddenly, and everything isn't just, coming up rosy, even though you guys want to believe it is.
The best part of this discussion is that Herb's completely re-energized now, completely re-energized, and I just love that. I just want to note, though, Joe Livornia, first of all, I'm not sure about first quarter GDP. stocks are looking towards the second half of the year. But
right.
Q1 GDP may actually be up 0.2 or 0.3.
Oh, it'll be positive, Larry.
I mean, it's a funny story. This recession that's been widely predicted for the last 6 months hasn't really happened yet. All right, it looks like a flat economy, which is a little different than a recession. But I do want to raise this point. I'm looking at today's earnings. I get them after 5 p.m. every day. You got 51% of the S&P 500 companies reporting. Okay, total share weighted. I like to use average earnings. They're down 19%, so call it 20%. On the other hand, if you take out financials, they're up 11%. Now, I think that's very positive.
It is, Larry, but
that's actually more positive than I would have thought, given the energy crunch that worries me so much about corporate profits, where I think Herb Greenberg has a good point that some of these companies have been hurt.
I think that's a very fair point, but I would add the following. In the NIPA profits, financials are 40% of total profits. They're a real big piece. I don't think we're out of this credit crunch yet. I think there's still some weakness, and I think to Herb's point, which I have a lot of sympathy toward, is the consumer. I think the consumer will slow, and importantly, Larry, I think the recovery in the second half will be muted, and that's when the stock market. Well, yes, I don't think there's going to be a very sharp recovery.
Do you agree with that, Jerry? Do you think that has to be as a preordained? I mean, you've had a hell of a lot of Fed stimulus. You have these goofy tax rebates, which I can't stand. Although, let us recall, at least for this year, the low investment tax rates on cap gains and dividends are in place. And I wonder, Bush is getting bashed around, as he always does, the poor guy. The reality is those tax cuts helped the economy 5 years ago. They may still help the economy, even though we don't give them any credit.
And actually they may help the economy as they get closer to expiration, because people are going to accelerate the activity in anticipating that that's coming.
Although Obama hasn't hit bottom yet.
Guys, we're assuming they're going to expire there. I think that, it's definitely a good point that they're helping this recovery. But if you look at China, look at the news out of there, a 9% move in the Chinese stock market. And largely because a barrier to domestic investment was removed.
Walk us through this.
That's all cap gains is. It should be gone altogether.
Jack, take a step back for our viewers who may not follow this. This is great. Big news this morning. We all picked up on it. The Shanghai stock market up big. Now, what tax did the Chinese cut?
It's a tax. It's a barrier to domestic investment. How much folks can invest.
The transactions tax.
Excuse me, I need to interject. What the Chinese did is they lowered the stamp tax, the transaction duty on already existing public share transactions. That was something they put in place 6 months ago in order to cool off their stock market. Their stock market fell 50% after that, so they've simply gone back to where it was 6 months ago, saying mission accomplished, fine, we no longer need to quell speculation. So look, I'm as much as for anyone else on this show for tax cuts, but let's tell this story straight. All they did was set a transaction tax, a stamp duty, back to where it was 6 months ago.
It's a lever to pull. That's exactly this. It's the same effect. It has the same effect as a higher cap gains and dividend rate. It's the same thing. It's a lever to pull.
In effect, it's a turnover tax. And a lot of people want cap gains to become a turnover tax, by the way, as in let's not turn over. Only when you sell is that tax going to take effect. And if you reinvest it, the tax will never take effect. So this turnover tax thing is kind of interesting. But so why did that, continue your narrative, Jerry, why did that help things? So let me ask you, does tax cuts help stocks? They help economies?
Well, of course they do.
This is a very much in doubt. It seems like an obvious question, but a lot of people disagree with this.
Look, the Chinese are having the same ideological debate that we're having. They just might be a little bit more on the pro-freedom side of it than we are.
Who's their Obama?
It's the Communist Party is their Obama.
Really?
Can I get a word in on China?
Who's winning this thing?
Adam Smith is winning in China. The question is, will he win here? I'm sure he'll win there.
All right, hang on.
I think he'll win here.
All right, we're going to come back. I'm in favor of Adam Smith winning everywhere. Looks like Chairman Rangel's got a vote on the House floor, so he may make it, but it doesn't look like he's going to make it this evening. If not, we'll see him again. We got plenty to do. I want to stick with this China story. I also want to look at some stock market earnings reports today that may not have been so good, and Herb Greenberg may be right. All is not completely well. As always, by the way, we remain firm believers in the Kudlow Creed.
I believe free market capitalism is the best path to prosperity.
You're watching Kudlow and Company on CNBC, first in business world.